All right, got another video for you. This time it's with Palantir. I just listened to the Q3 earnings call, and I'm going to go through the Q3 investor presentation for you. This I will never tell you to buy a stock. This is a channel dedicated to what stocks I look at. What I'm holding. I'll disclose which ones I hold. I do own 500 shares of Palantir at about $20 a share. I will say though, after listening to this earnings call in particular and reading this deck, I am now more convinced than ever that this will be a $1 trillion company. I think we're looking at an Amazon, Google, Apple type of return over the next decade plus. I think Palantir is here to stay. Definitely pay attention because I'm going to be spitting a lot of numbers at you. But, again, I'm never going to tell the viewers or subscribers to buy a stock, but I would heavily, heavily consider this. I think this is going to be a massive generational investment opportunity. Okay, so let's get into it. For the quarter, Palantir generated $392 million in revenue. They're now projecting to grow at about 40% year over year. That beats their prior guidance of 30% year over year growth. Now, they have said that over the next 5 years, they're going to stick to a 30% growth target, but I personally think that they're kind of lowballing us here. I think that the results that we're seeing this year, are indicative of what they could do in the future. And I'm going to get into some of the deal specific stats here and why I think this company could be growing well over 30%, for years to come. Now, equity research analysts, Palantir is kind of this polarizing company where it seems like there's either super bulls or super bears, and there's nobody really in between. The bear thesis has kind of come down to two things, which is stock-based comp and growth on the commercial side. The bears paint Palantir out to kind of be this glorified government contractor, and I don't view that as the case. Yes, they do have a lot of contracts with the United States government as well as some of our allies, but they are penetrating the commercial sector at what I think is a very respectable rate, and we can see that here in this chart. But the other thing I'd like to add is that they are investing a lot into different SPACs, and I'm going to get into that in a second here because I found something pretty interesting today. And remember, these SPACs, obviously these have nothing to do with the government. These are all commercial customers, and I think Palantir is being highly selective and forming very strategic relationships with the companies that they're investing in, and how the Foundry platform, which is Palantir's kind of premier product, is benefiting these different companies. So this is pretty unreal. Okay. In Q3, they signed 54 deals of at least $1 million. About 60% of them were at least $5 million, and 18 of those 54 were at least $10 million. This is mind-boggling. But they said on the earnings call, they said something very interesting. And after I thought about it, I actually thought, maybe this isn't, maybe this isn't as ridiculous as it seems when you're just looking at this. And what they said is that they don't really compete with any particular company or particular tech product out there. They compete with their customers. And what they meant by that is that all of these customers, especially, commercial clients, they spend years and years and years, invest tens of millions of dollars on consultants and IT spend and IT infrastructure. And they try to, sort of do it yourself, DIY, in-house, and they end up not getting anywhere. And so by the time they throw in the towel and they give up, and then they invite Palantir in for a demo, they are completely blown away by what the Foundry product is capable of. And let's remember, Palantir was around for well over a decade and had raised billions of dollars in venture capital when it was a private company. So this company, Palantir, has been around for a long time, and they raised a ton of money to get to where they are. And so, I think that's allows them to have a little bit of pricing power when they show these clients what Foundry is capable of doing. I think they can say, look, you've spent, millions of dollars and have gotten nowhere over the last 3 years. We've spent billions over the last decade plus. Let us help you. And that's when, if you think about it, $10 million is, actually a small price to pay, considering that the client probably spent more than that getting nowhere in-house and completely wasting their money. I'm not going to get into, I'll get to some of this free cash flow stuff, but I want to get here. So they talked about automotive and mobility use cases. And this is super interesting to me because last week, a different YouTuber, his channel is ticker symbol U. He did a video with the CEO of Wejo, WEJO. They will be going public through a SPAC. I'll put the video in the description. I didn't really know what Wejo did at first, but basically they are this data analytics company that collects data points in the automotive industry, and they've collected tens and tens and tens of billions of they're trying to make kind of like cars smarter, if you will, and not just cars, airplanes, scooters, motorcycles, all sorts of different vehicles. And it's this incredibly interesting technology. The founder is a really smart guy. Palantir invested in the SPAC. The SPAC was just approved by the shareholders, and so Wejo will be sort of de-SPACing, if you will, soon, and be its own publicly traded company. But from the earnings call, I'm just going to do a search for Wejo here. This was pretty amazing. They were saying on the earnings call, Wejo was able to develop a market-ready application in as little as 6 weeks using the Foundry product. Now, to put this in perspective, that's unbelievable. It basically took a month and a half to get something market ready, or sort of in production, if you will. There are other technology companies where it might take a year and a half, even 2 years to get the whatever technology product the customer bought to actually be powering what they needed to be powering and get into production. That kind of shows you right off the bat like how out of the box ready to use the Foundry product really is. But another thing that I thought was interesting is that I think that Palantir has some sort of strategy, and this is just me speculating, but this is the type of technology that frankly is industry agnostic and can really help anybody, right? It can help energy companies, it can help pharmaceutical companies, it can help automotive companies, it's helping the government, it can help logistics companies. But I think they specifically have a plan in automotive and mobility, which does make sense. I mean, there's tons of different car companies, there's tons of different types of cars. Vehicles are always on the road. Obviously logistics relate to, shipping, like cargo ships, airplanes. It's the total addressable market is gigantic. But the reason that I think that there's a kind of specific strategy in automotive and mobility is that I was looking at the S1 for Bird Global. Bird, those are those, you've probably seen them before. They're those electronic scooters that are just kind of like thrown everywhere. It seems like, I live in Washington, D.C. I see them on the sidewalk all the time. When I go to Philadelphia, I see them there as well. They're, people don't really put them back. But anyway, getting into Bird's S1 here, I'm going to do a Control F for Palantir. And we can see here, it's kind of hard to see. This font is really small, but Palantir actually invested in Bird, which I found interesting until, if you scroll up here, you can also see who else is a shareholder, Craft Ventures. And so for those that don't know Craft Ventures, that is David Sacks's venture capital firm. David Sacks is also on the board of Bird. And, I talk about this a lot. I'm a big fan of the All In podcast, which is, Chamath Palihapitiya's podcast, but, with him and his 3 besties, one of which is David Sacks. David Sacks was part of the PayPal mafia, as it's called. He goes way back with Peter Thiel. Peter Thiel, obviously a co-founder and, early employee investor in Palantir. So, this is me completely speculating, but I'm wondering if, Kraft brokered some kind of deal, got Palantir involved, allowed them to invest in Bird. And this is just going to be yet another amazing use case in the automotive and mobility industry. Again, pure speculation on my part, but does kind of make sense. But let me know what you think in the comments for sure. So, another thing that I thought was pretty amazing here is they have this Foundry for crypto application, which, if you think about it, let's just do a Control F here, crypto. We're leveraging our deep expertise in AML and KYC to enable accelerated compliance across crypto and fintech. I mean, this makes total sense to me. I mean, think about it. Think about how complicated the blockchain is. Think about all the large investment banks that are now starting to get involved with crypto, and there's crypto ETFs, there's public companies, Tesla, MicroStrategy actually have crypto on their balance sheet. I think that obviously there's kind of this boom in crypto right now. again, I'm not like a huge cryptocurrency speculator per se, but I do own Coinbase. That's the way that I'm personally playing the crypto market. I've come to terms that crypto is definitely here to stay. What role it's going to play in the future, I think it's still, too early to tell. But this is just an amazing example of Palantir's leadership, not only capitalizing on what's, kind of like a hot trend right now, but realizing, okay, we've made this software that's out of the box ready. There's all these different applications, and now we can seize the moment in this brand new industry, this crypto economy, if you will. And, basically like the use cases for fraud and all sorts of things. It's going to be really, really interesting how investment banks leverage the Foundry product, especially as it relates to crypto and the crypto economy. Let's get into some of the financial results, though. If we go down here, some of the, it's just kind of amazing. Everything you would want to see as a shareholder is happening. Their revenue is growing on, both sides of the business, the commercial side, the government side. They're expanding their margins. They're signing larger deals. They're beating their own guidance. Year-to-date revenue is up 44% to 1.1 billion, and now they're saying they're going to do 1.5 for the year. That's crazy growth. It's like over 40% year over year, and their cash from operations is now positive, right? I mean, last year, this time last year, it was negative cash from operations. Now they're over 100 million in cash from operations. This is cash that they can use to reinvest back into the business, for product development, for sales, marketing. They obviously have this, kind of new strategy where they're going to be hiring an entire sales team. They have a channel team. They're going to be leveraging partnerships. Up until now, they've had a very small sales team. The CEO and the chief product officer and the founders were really the ones going out doing the selling. They're going to have, a true sales force now, with sales engineers and everything. It's going to be really exciting. Free cash flow, same deal. It actually represents, 30% margin. This time last year, negative free cash flow. So, this is encouraging actually in a way, because, I'm sure what they were saying last year is, well, we're reinvesting back into the business and we're going to see benefits. And, the thing is, we're seeing benefits only a year later at this magnitude. I mean, that's amazing. It's one thing to say, well, I'm going to lose money today to, have a return tomorrow, but the return might be a little bit vague. They lost 53 million this period last year. They're now generating 30% margin on, well over $100 million in adjusted free cash flow. It's unbelievable. Now their free cash flow guidance for the full year is over 400 million, up from 300 million in their prior guidance. So, I mean, this isn't like, oh yeah, we're going to increase by, 10 or 20 million. This is $100 million increase. This is serious margin expansion that's flowing right down to the bottom line that they can use to invest right back into the business. This is why I'm so pumped for Palantir right now. I'm so happy that I bought when I did. After these quarterly results, Kathy Wood bought a bunch of shares all throughout her different ETFs. Look, I'm a big fan of Kathy Wood. Sometimes she does buy stuff, then goes on CNBC, talks about it, and then she sells it a month later. I do not see that being the case with Palantir. I think she very much has a really long-term vision. I think she understands this technology on a deep level. The more that I listen to the earnings calls, I'm learning more and more about what they actually do. They've been painted out to be this very secretive company. Nobody really knows what they're doing. I think they're doing a really good job illustrating the different use cases, talking about the clients, and actually explaining how the product really works. Because I will say this is a very, very complicated, probably a very complicated sale, because it's a very complicated product to understand. Let's go here. I already hit on that. Government revenue grew 34% year over year. Signed new deals with the Air Force, NIH. They also signed a deal with they've been down selected. Here we go with the Army deal. They also have an opportunity with the VA right now. So they're all over the place with the U.S. government. Here's that same stat again: 54 deals, 18 of which were 10 million. Just crazy, just mind-boggling. This is a slide that I really like to look at. The concept itself is a little bit complex, but not really. So we ended up Q3 with $3.6 billion in total remaining deal value. What that means is like they basically could sell nothing and still do $3.6 billion with their existing cohort of customers. That's crazy. That basically means they have billions of dollars banked, without having to sign any more customers, which obviously we know, is not going to be the case. They're clearly going to go out and continue to sign, new customers. Total customer count up 20%. They've got over, 200 customers now. Average revenue per top 20 on a TTM basis, $41 million. That's just, that's what you really want to see. Now, with that said, there's definitely some customer concentration here, I guess you could argue, but these are probably, obviously we don't know who these are, but, I would guess some of these are, the really big, government contracts that, are, hundreds of millions of dollars. But look, as I was saying, gross margin, contribution margin expanding, even though it only looks like 1%, when you're doing over $1 billion in revenue, that is a lot that flows down right to your cash flow, your free cash flow margin. That's really, honestly, that's it, right? I mean, they're going to do 1.5 billion in revenue this year, 40% year over year. They're saying 30% for, this in the next 4 years. I personally think that's, definitely a conservative number. I think we could very well see over 40%. Again, they're penetrating the commercial sector. They have all these new use cases. I think that they're really onto something with the automotive industry. They're really capitalizing on the crypto market right now. I think the implications with Foundry for crypto are going to be huge. It's actually almost like impossible to quantify it if you really think about it, just given the volatility of the different cryptocurrencies and the impact it's having, on the economy as a whole, as well as, how it's affecting the balance sheets of other publicly traded companies, how the banks are figuring out how to get involved, how it's going to be regulated. Foundry is going to be at the heart of all of this. And so for this reason, look, I will say the valuation, it's not all good. I don't want to be like a total fanboy here. This is definitely, the valuation is a bit rich here, right? I mean, the market cap, let's look at the market cap. Probably like 40 billion, 45 billion, something like that. Yeah, $45 billion, 45 billion market cap. Okay. And that's off of, TTM sales of $1 billion or so. So look, the multiple is a bit rich. I'm not going to sugarcoat that, but I think in this case, it's justified. I'm more than happy to pay, this price to add to my existing positions, because I personally think this, as I said, I think this is going to be $1 trillion enterprise. So, act now. That's my, kind of parting words, but definitely let me know what you think. I want to know what you think about the company as a whole. I do read the comments. I try to comment back. I want to know if you think there are any other better technologies out there, or at least anybody that they really are competing with, even though they say they don't compete with anybody. If anybody has any, kind of thoughts, definitely let me know. Please like, subscribe, and share this video. It helps me out immensely. I will put a link to my Substack where I do kind of deeper dives. It's totally free, so you don't have to spend any money. You just have to hit that subscribe button. You'll get my newsletters. I try to send them out at least once a week. Again, like and subscribe to this channel. Like the video, and I will put other videos for other stocks that I've covered. I've been covering Matterport and SoFi in particularly, and again, I will put the video to ticker symbol U, his coverage of Wejo. I definitely think that's a company worth checking out. I don't hold any. I just really enjoyed that video. I thought the CEO was really smart, and given their affiliation with Palantir, I'm seeing a lot of opportunity, I think, with the SPAC investments that Palantir is making. So thanks for watching. Remember to comment, like, subscribe. I will get back to you. I appreciate you watching. Thanks.